this is a real big reason why something major can happen between now and when the BRICS meeting starts on the 22nd of October. An event will take place that will make it impossible for the BRICS to meet. It's interesting, the comment you made that all fiat currencies are falling. If you measure them against gold, yes, they are. The only reason why they will rise against the dollar is because the dollar is going to be very weak. So all currencies are going to be falling, basically.
Unlike the 2023 BRICS summit in Johannesburg, which was seen as a minor challenge to the US dollar, the upcoming summit in Kazan, Russia, is poised to be transformative. BRICS has expanded to include 5 new members: Saudi Arabia, the United Arab Emirates, Iran, Egypt, and Ethiopia. Notably, Saudi Arabia, the leading oil supplier, has joined Project mBridge, a digital currency initiative, and is exploring alternatives to the dollar-based oil payment system, including the potential use of the petroyuan. According to Simon Hunt, an accomplished development economist, if BRICS successfully develops its own currency and creates a viable alternative to institutions like the World Bank, the implications for U.S. economic dominance could be significant. This potential shift in global power dynamics raises the likelihood of substantial geopolitical events occurring in the lead-up to or during the summit. Western nations may seek to undermine BRICS cohesion through diplomatic pressures, economic sanctions, or even by inciting conflicts within member states. Moreover, the current trend of declining fiat currencies is noteworthy. Analysts observe that while all fiat currencies face devaluation, the US dollar may experience a sharper decline due to its prolonged overvaluation in recent decades. This anticipated weakening raises concerns among investors and policymakers regarding the dollar's stability as a reserve currency. As the dollar depreciates, global trade and finance ramifications could be extensive, particularly for countries that heavily rely on dollar-denominated assets. Of particular interest during the BRICS summit is China's potential announcement regarding significant gold reserves backing its currency, estimated at around 25,000 tons. Such a declaration could enhance confidence in the Chinese yuan and destabilize Western financial systems. If China positions its currency as a credible alternative to the dollar, supported by gold, it could fundamentally reshape the global monetary landscape and challenge its status as the primary reserve currency. We will present clips from Simon Hunt's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
There are 2 fundamental reasons. The first is that Washington, ever since Brzezinski, has always said we cannot have one or more countries controlling Central Asia, i.e. the heartland. Must not happen. So what do we have now? We have basically China and Russia controlling the heartland. And the second reason, if BRICS is allowed to mature to the stage where they issue their own currency, their own ministries, that the new development bank becomes a real rival to the World Bank, then America and her allies cannot allow that to happen because it will be the end of America's hegemony. So this is a real big reason why something major can happen between now and when the BRICS meeting starts on the 22nd of October. An event will take place that will make it impossible for the BRICS to meet. I think and maybe this will come out at the BRICS meeting, I do think the day will come, maybe at the BRICS meeting, when China announces our currency is supported by the gold which our citizens own. And they will then give the figure. which will be around 25,000 tons. That, of course, would completely upset the Western's apple cart. The 25,000 tons plus is what has been bought from the Shanghai Gold Exchange since it was opened, I think it was in 2002. On top of that, China's government owns, in round numbers, another 25,000 tons, probably most of which is actually owned by the PLA. Anything the PLA imports is not recorded in customs statistics.
So
what the PBOC owns is only a small fraction of the total.
A major development is the Federal Reserve's recent decision to cut interest rates by 50 basis points, which raises concerns about the economy. This unexpected cut comes just 50 days before the presidential election, suggesting the Fed might realize it should have acted sooner. Many expected a smaller decrease initially, but the timing has sparked questions about possible political motives. The Fed, however, insists its decisions are purely based on economic factors. This larger cut indicates that the Fed is aware of issues in the credit markets that the general public might not fully recognize. Many analysts believe the U.S. is either already in a recession or close to one, with growing fears of geopolitical tensions. Simon highlights that revisions to Q2 GDP are expected soon, which could shed more light on the current economic situation. The market is currently anticipating further rate cuts, which could drive up stock and base metal prices early next year unless major global events intervene. However, looking beyond early 2025, Simon warns that the market may be underestimating the risk of a potential recession. Such a downturn could lead to significant drops in asset prices, including base metals. If a recession occurs, it would likely prompt aggressive fiscal and monetary policies reminiscent of the late 1970s and early 1980s. This could lead to a resurgence of high inflation driven by shortages and a declining dollar.
We need to look at why did the Fed cut rates by 50 basis points. In our view, it was 50 and not 25 because they know something is coming down the credit pike that the markets are not appreciating. I think they know that America, if it's not already in recession, will soon be, and they must have a fear of a war risk. I think probably the biggest fear that the Fed had or has is credit markets. And I think that if one looks at what's going on in private credit, I think that is where the risk is. And then if you look at the real economy, GDP has been inflated. If you take, there are two measures of spending in America, as you know, GDP and GDI. From the first quarter of 23 to the second quarter of 24, GDP rose by 2.7%, GDI just 0.9. Those are official numbers. And I gather that either today or tomorrow, the revisions to Q2 GDP will be coming out. So maybe we'll get some hints from that. So what does this mean in our view? Markets are looking for further rate cuts, which will probably come. So both equity and base metal markets will probably go to new highs by early next year, unless war intervenes. But let's assume war does not intervene, then that is what you're going to have. But what happens beyond, say, the first quarter of next year, I think is what the markets are not focusing on, which is actually that America goes into recession, markets fall very sharply, and so therefore will base metal prices. What does that then lead to? It leads to fiscal and monetary policy becoming extremely accommodative and will result in a resurgence of inflation, as we saw in the second half of the 1970s up until 1981-82. So with, in our view, food and energy shortages, the dollar falling sharply, we're going to see inflation repeat the levels that we saw when they peaked in 1981. Global inflation, I think it was 15-odd%, and the US CPI, 13%.
Countries globally are increasingly pursuing alternatives to the US dollar. For instance, China and Russia have begun trading in their own currencies, while India, Kenya, and Malaysia advocate for de-dollarization. The potential establishment of a new BRICS currency may further challenge the dollar's dominance as a reserve currency. As nations diversify their reserve holdings, the dollar could face intensified competition from emerging currencies, potentially reshaping the global economic landscape. Let us know your thoughts on Simon's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.